which has come by, and the company sounds very bullish. They talk about how the business sentiment has remained positive and healthy demand has been seen across most of the segments. Even their recovery is seen in the order backlog, which was a problem earlier. The European market, where demand continues to be an issue, has seen a healthy recovery. So Europe is a big market for them, and recovery there is something that the street likes because they have achieved a double-digit revenue growth there. Their first half has seen growth of 17.4% in terms of revenues, which is 1,000 crore rupees. So remember, their Q1 revenues were at 454 crore rupees, so they have done more than 500 crore rupees. These are provisional numbers, of course, but this is the revenue number for them this time. There is a shift in product mix this time around, so this led to moderation in gross margins on a sequential basis, but on a YY basis, there has been an improvement. While the numbers look good, they do talk about certain issues. They are talking about strategic raw materials being unavailable, which is a problem, and this will result in price increases in the coming quarters despite supply conditions remaining stable. So we'll be watching out for the margin pressures going forward, or we'll watch out whether they're passing on these price hikes to the customers and whether that's taken positively by the customers or not. Net debt has risen, so that's a problem. 596 crores in September quarter, and remember, it was around 550 crores in Q1. While it's a 40 crore or a 50 crore increase, the company has been talking about a debt reduction every quarter, but this hasn't come by this time around. So we'll be watching out for their debt reduction targets as well. They say debt increased due to inventory replacement, so we'll watch out for what the inventory numbers look like in the coming quarters. On the promoter holding, they said that yes, promoters sold around 3.32% holding in September for personal requirements, but they do not see more of this happening. Maybe one of the things that the street is liking. So while the numbers look good in Q2, of course, there are certain monitorables in terms of raw material supply and the debt reduction plans as well of the company that we'll be watching out for.
Thank you so much for bringing light to that. We'll keep an eye out on both price increases as well as the debt movement. But moving on,